You've been told your whole life that saving money is the key to financial freedom. You've been taught to cut back on small pleasures, to collect coins, to live below your means, and to stash away every bit of what you earn. You've been made to believe that security comes from the balance in your savings account, that the number on that screen represents safety, stability, and wisdom. But what if that belief, the one you've been holding on to for years, is quietly keeping you poor? What if the very thing you think will set you free is a chain that keeps you still? When you hear the word saving, it feels comforting, doesn't it? It feels safe. It feels responsible. Because saving is a language of caution, and caution has been disguised as wisdom. But the truth about money is not about what you keep. It's about what you make it do for you. Most people don't stay poor because they don't earn enough. They stay poor because their mindset towards money is built around fear, not growth. They don't understand that money is not meant to sit. It's meant to move. It's meant to flow, to multiply, to circulate. The more you hoard it, the less it works for you. The less you allow it to breathe, the more it suffocates under the weight of your fear. Let's face it, saving feels good because it gives the illusion of control. You look at your account, see that number sitting there, and it feels like progress. But that's not progress. That's stillness. That's stagnation. Inflation is eating away at your savings while you sleep. Prices rise, currencies lose value, and the world keeps moving while your money stays still, getting weaker every day. The irony is that what you believe to be safety is actually slow decay. You can't save your way into wealth any more than you can diet your way into strength without ever training. Saving is discipline, yes, but without direction, discipline is just well-behaved fear. Think about this for a moment. Your grandparents probably told you to save. Your parents told you to save. And yet, how many of them achieved financial freedom through saving alone? How many retired comfortably without depending on someone else? The truth is harsh. Saving was never designed to make you rich. It was designed to make you stable in a world that rewards risk-takers. Banks encourage you to save not because it benefits you, but because it gives them capital to invest. Your savings become their investments. You earn interest at 5%. They earn 15% or more using your money. And yet you feel safe, believing you're being smart, while they grow wealth off your fear of losing it. This isn't to say that saving is wrong. It's necessary. It's a foundation. But it's not the house. Saving is the first step, the preparation before the journey. It's the fuel, not the vehicle. The mistake is in stopping there, thinking that stacking cash in a corner makes you financially wise. It doesn't. It makes you a collector of potential that's never realized. Imagine working hard your whole life, watching every expense, saying no to every coffee, every trip, every small joy, all in the name of saving, and yet never building wealth because your money never had the chance to grow. That's not discipline. That's denial dressed as responsibility. Money follows energy. It flows toward confidence, creativity, and vision. When you move it with purpose, it multiplies. But when you sit on it, when you clutch it tight, you send a message to the universe, I don't trust abundance. And in that mindset, opportunities disappear. Wealth is not built from what you fear to lose. It's built from what you're willing to grow. Every great entrepreneur, every investor, every self-made success story shares one truth. They understood the power of movement. They understood that saving protects you for a day, but investing builds you for a lifetime. You might be wondering, why do so many people fall into this trap of oversaving? Because fear is easier than learning. Fear is safer than risk. And the world rewards those who play it safe with comfort, not freedom. You get enough to survive, not enough to thrive. You work, you save, you wait. You tell yourself one day you'll invest when the time is right. But the time is never right. The market feels unstable. The job feels uncertain. The bills keep coming. So you keep saving, waiting for that perfect moment. The problem is, the perfect moment never comes. And while you wait, time does what inflation does best. It silently erases the value of what you stored. We've all seen it happen. You might have an elder relative who spent decades saving every penny, only to realize their retirement fund barely covers basic living costs now. The money they thought would secure them has lost its value over time. They played safe, and safety betrayed them. Because the economy evolves faster than savings grow. And that's the truth nobody teaches you in school, that your real enemy isn't spending. It's stagnation. If you think about the psychology behind saving, it's deeply emotional. It's rooted in scarcity, the fear that there won't be enough tomorrow. And that fear shapes your entire relationship with money. You treat money like something fragile, something to protect, instead of something to grow. But the wealthy don't think that way. They see money as a tool, not a treasure. They understand that money expands when it's used with purpose, invested in skills, in assets, in opportunities. They take calculated risks, not blind leaps. They know that every dollar sitting idle is a missed opportunity to build another stream of income. This is where the mindset shift begins. When you stop seeing saving as a goal and start seeing it as a stage. When you understand that the purpose of saving is to prepare you for investment, not to stay forever in the comfort zone of accumulation. You save to invest, not to store, because stored energy fades, but directed energy grows. Your savings should have a plan, a target, a mission. Every amount you set aside should already know where it's going next, what will create, what will build, what it will earn. Without that purpose, it just sits, lifeless, waiting for inflation to claim it. You might be saying, but investing is risky. Yes, it is. And so is not investing. There is no such thing as risk-free living. You're risking your financial future every time you choose comfort over growth. You're risking your potential every time you wait for certainty. The wealthy don't fear risk. They manage it. They study it. They calculate it. They prepare for it. That's the difference between a gambler and an investor. One throws money into the unknown, hoping for luck. The other learns, plans, and executes, understanding that risk is the cost of opportunity. If you want to break the cycle of financial stagnation, start here. Change how you think about money. Stop idolizing saving as the ultimate goal. See it instead as your foundation, your first step toward freedom. Because the true path to wealth isn't saving. It's multiplying. It's learning to make your money work harder than you do. You earn, you save, you invest, and then you repeat. That's how compounding begins. That's how momentum builds. But all starts with a single mental shift, from fear to confidence, from scarcity to growth. Let's talk about why people find it so hard to make this shift. It's because most of us have been programmed from childhood to associate money with morality. You are told that being cautious with money is good, and taking risks is bad. That saving is responsible and investing is reckless. But that's a myth created by those who never learned to build. Builders think differently. They know that playing safe doesn't protect you from loss. It only guarantees that you'll never rise. And the truth is, most people don't fail because they took a risk. They fail because they stayed still too long. So what's the real danger of oversaving? It's not just financial. It's psychological. When you build your life around saving, you teach your brain to think small. You train yourself to chase security instead of opportunity. You focus on preservation instead of creation. And that kills innovation. The more you save, the more afraid you become to lose. The more you hold, the harder it is to let go. You become addicted to the illusion of safety, even when it's quietly costing you growth. You stop asking, how can I make more? And start asking, how can I spend less? And in that single question, your potential starts shrinking. The wealthy ask different questions. They don't say, how can I save? They say, how can I invest? How can I build systems that make money while I sleep? That's why the rich get richer. Not because they work harder, but because their money does. They understand leverage. They understand timing. They understand that the greatest risk isn't losing money. It's wasting time. Because time is the one asset that never grows back. When you save too much and invest too little, you're not just missing out on opportunities. You're losing years of potential compounding. Every dollar not invested is a dollar that could have multiplied tenfold in a decade. That's the hidden cost of saving. The price of safety is growth. And the longer you stay in that comfort zone, the more expensive that safety becomes. So where do you begin? You begin by learning. Not gambling, learning. Learn how money works. Learn about stocks, real estate, businesses, and index funds. Learn how to evaluate risk and how to diversify. Knowledge doesn't eliminate risk. It manages it. You don't have to become an expert investor overnight, but you do have to start thinking like one. You have to stop fearing loss and start understanding gain. Because the moment you decide to learn, you stop being a saver and start becoming a builder. You have to realize that the mindset that got you stability won't get you freedom. Saving got you here. But to go further, you need to grow. The next level of financial maturity isn't about restraint. It's about responsibility. Responsibility to your future self. To make your money work for you. To let it breathe, expand, evolve. Every great story of wealth began with that leap. The leap from saving to investing, from fear to courage, from holding to building. And here's the most powerful truth. Money doesn't change who you are. It amplifies what you believe. If you believe in scarcity, you'll live cautiously, saving every bit and never feeling enough. But if you believe in abundance, that you can create, earn, and rebuild, you'll move money with confidence. You'll see it as a tool, not a trophy. You'll stop trying to keep it and start using it to build something that lasts. So, if you've been saving, that's good. You've built discipline. But now it's time to build direction. Let your savings be the seed, not the soil. Plant it, nurture it, let it grow into something that multiplies. Because money, like time, only matters when it's used well. You weren't born to live cautiously. You were born to create, to build, to expand. Safety may protect you for a while, but growth will set you free. You've been told to play it safe, to be careful, to think twice before you act. Somewhere along the line, you learn that risk is dangerous, that stepping into the unknown is reckless. And that lesson stuck. It became part of how you see the world, how you handle opportunities, how you think about money. You see, the real reason most people stay poor isn't just because they don't invest. It's because they're afraid to. And that fear doesn't come from logic. It comes from conditioning. When you were young, you probably heard phrases like, money doesn't grow on trees, or don't waste your hard-earned cash. Those weren't just words. They were lessons planted deep in your subconscious. Lessons that shaped your relationship with wealth before you even understood what money really was. You watched adults stress about bills, talk about job security, and celebrate small savings like survival trophies. You absorbed that energy, the anxiety, the caution, the idea that having money meant being safe, and that losing it meant failure. And so, even as you grew older, that belief never left you. It followed you quietly, whispering that safety was smarter than courage. But what if that safety is exactly what's keeping you stuck? What if the fear of losing is the reason you never win? The truth is, money isn't about math. It's about mindset. You could have all the financial knowledge in the world, but if your emotions control your decisions, you'll always default to fear. The brain hates uncertainty. It's designed to protect you, not to grow you. That's why your first reaction to any form of risk, be it an investment, a business idea, or even a job change, is hesitation. Your mind confuses risk with danger, even when it's the only doorway to opportunity. Think of it like this. In the past, risk used to mean survival. Taking a wrong path in the wild could mean death. That instinct still lives in your brain. It's ancient, primal. But in the modern world, risk rarely means physical danger. It means uncertainty, discomfort, the unknown. Yet, your body reacts the same way. Your heart races, your mind overthinks, and you retreat. That's why so many people never move beyond the comfort zone of saving. Because saving feels predictable. You know what's coming. You see the numbers grow, even if slowly, and your brain rewards that with a false sense of security. But let's dig deeper. Why does saving feel good? Because it feeds the part of you that craves control. Control is comforting. It's measurable. You can count it. You can see it. You can feel it when you check your account. But control and growth rarely coexist. To grow, you must release control. You must let uncertainty in. And that's where most people stop, because control feels safer than freedom. We've been conditioned to admire the cautious, not the courageous. Society praises the saver, not the investor. You're told that taking risks is gambling, that investing is for the rich, that business is for the brave. And you, the everyday person, should just save quietly, stay safe, and hope for a comfortable retirement. But here's the secret. The rich weren't born rich. They simply learned to think differently about fear. They learned that fear isn't a stop sign, it's a signal. It tells you where the potential is hiding. The very thing you're afraid of doing is usually where your next level of growth lies. The psychology of poverty is built around avoidance. Avoiding loss, avoiding risk, avoiding pain. The psychology of wealth is built around acceptance. Accepting risk, accepting uncertainty, accepting responsibility. That's the dividing line. Poor people think of risk as danger. Wealthy people think of risk as opportunity. Poor people say, what if I lose? Wealthy people say, what if I win? And what can I learn if I don't? One mindset sees failure as a threat. The other sees it as tuition. The difference isn't money. It's mindset. If you look closely, fear of risk isn't just about money. It's about identity. It's about who you believe yourself to be. If you've grown up being praised for being careful, your self-worth becomes tied to that caution. You pride yourself on never making mistakes. But that pride can become a prison. Because wealth doesn't reward those who never fail. It rewards those who learn fast. The cautious may avoid pain, but they also avoid progress. And in avoiding risk, they avoid reward. Think about the people you admire, the entrepreneurs, innovators, investors, creators. They all share one thing. They move forward despite uncertainty. They acted without guarantees. They learned to be comfortable being uncomfortable. They didn't let fear of losing stop them from trying. And because of that, they gained not only money but experience, confidence, and freedom. The difference between you and them isn't intelligence. It's tolerance for uncertainty. Let's talk about that tolerance, your emotional capacity to handle not knowing. Most people underestimate how powerful it is. Because when you can tolerate uncertainty, you can stay in the game long enough to win. You stop running at the first sign of loss. You stop panicking when things go wrong. You start thinking like a strategist instead of a survivor. And that shift changes everything, not just in money, but in life. But here's the paradox. You can't build that tolerance without stepping into risk. You can't learn to swim by standing at the edge of the pool, reading about water. You have to get in. You have to get wet. You have to struggle a little before you learn to float. That's how confidence is built. That's how financial intelligence grows. Not through saving, but through experience, through mistakes, through learning what works and what doesn't. Every investor, every entrepreneur has stories of loss, and those losses taught them more than any book ever could. This is where most people get it wrong. They wait to feel ready. They tell themselves, I'll invest when I have more money, or I'll take that risk when I know more. But readiness is an illusion. You'll never feel ready to do something you've never done before. Readiness comes after action, not before it. You learn by doing, not by waiting. The longer you wait, the more your fear grows roots. And fear is like a weed. If you don't pull it early, it takes over everything. The real psychology behind saving isn't discipline, it's distrust. You don't trust yourself to handle risk. You don't trust the process to work in your favor. You don't trust your ability to recover from loss. So you cling to what's safe. But what you call safe is really stuck. You're not protecting yourself. You're preventing yourself. Every time you say, I can't risk it, what you're really saying is, I don't trust myself yet. And that's the root of financial stagnation, lack of self-trust. So how do you build that trust? By proving to yourself that you can survive small risks. Start small. Take calculated moves. Don't bet everything, but bet something. Invest not just money, but energy, time, effort, and courage into something that has a potential to grow. The moment you see that you can lose and still be okay, your brain starts to rewire. You begin to realize that risk isn't death. It's development. You begin to see losses as lessons and wins as rewards for courage. That's how financial confidence is born. There's also a deeper layer to this. The emotional comfort of saving. Saving makes you feel responsible. It makes you feel like you're doing the right thing. And you are to an extent. But comfort is addictive. The comfort of knowing your money is sitting safely becomes a cage disguised as peace. You stop looking for opportunities. You stop questioning the system. You stop growing. You start thinking, I'm doing fine, even when you're stuck in the same place year after year. That's the illusion of progress. When comfort masquerades as control, You need to understand that the economy is designed to reward movers, not hoarders. The system favors circulation, investment growth, creation. When you save, your money stays still. When you invest, your money contributes to the world. It builds businesses, creates jobs, fuels innovation. And that's why investors earn returns, because they take part in progress. They're not just holding wealth. They're helping the world move forward. You can't join that movement if you're clinging to safety. Let's talk about fear of loss, the biggest psychological block of all. You fear losing money because you attach meaning to it. Losing money feels like losing part of yourself, your effort, your worth, your status. But that's a false attachment. Money lost can be earned again. The experience gained can't be taken away. The only real loss is refusing to try. Once you realize that, the fear loses its power over you. Every successful investor started where you are, uncertain, afraid, unsure. The difference is that they didn't wait for fear to disappear. They acted while afraid. They understood that fear is not a wall. It's a compass. It points toward the areas of growth. Every time something scares you, it's showing you where you're meant to evolve. That's the beauty of fear. It's not your enemy. It's your teacher. And here's the truth about comfort. It's the slowest form of failure because it doesn't hurt. It doesn't alarm you. It doesn't warn you. It just keeps you still while the world moves forward without you. You look up one day and 10 years have passed. You've saved, you've waited, you stayed safe, but you haven't built. And that's when regret begins to whisper louder than fear ever did. You start to realize that you didn't protect yourself. You postponed yourself. You traded possibility for predictability. And the trade was never worth it. If you want to escape that trap, you have to reprogram how you think about risk. Don't see it as a threat. See it as a requirement. You can't grow without it. You can't learn without it. The best decisions in life often feel uncertain at first. That's how you know they're worth making. When you begin to see uncertainty as opportunity, your whole world changes. You begin to act differently. You start seeing possibilities where others see problems. You stop freezing when things go wrong and start adapting. That's what separates survivors from builders, their relationship with uncertainty. So the next time you find yourself hesitating to invest, start by asking this question. What am I really afraid of? Because it's rarely about the money. It's about failure, rejection, embarrassment, or loss of control. Once you name the fear, it loses power. You can plan around it. You can take smaller steps. You can learn, adjust, and grow. But if you never face it, it owns you. And here's a secret few talk about. Courage is not the absence of fear. It's the decision that something else matters more. Your freedom matters more. Your growth matters more. Your dreams matter more than the comfort of safety. When you start thinking that way, saving stops being the finish line. It becomes your launch pad. You save to prepare. You invest to build. You grow to sustain. That's how wealth is created. Not through perfect timing, but through persistent courage. You don't need to become a millionaire overnight. You just need to start thinking like one. Because millionaires aren't made by chance. They're made by mindset. A mindset that refuses to let fear be the boss. A mindset that chooses learning over comfort, growth over safety, and movement over stillness. You don't need luck. You need clarity, consistency, and courage. Those three will do more for your future than a lifetime of cautious saving ever will. So take a deep breath, look at your fears, and ask yourself, do I want to feel safe or do I want to be free? Because you can have both. Safety feels good now, but freedom feels good forever. You've saved long enough. It's time to step into the world of calculated risk, because that's where growth lives. That's where wealth begins. That's where the next version of you, the one you've always wanted to become, is waiting. When most people hear the word saving, they think of safety, a small nest egg in a quiet bank account, a tiny cushion against the unpredictable storms of life. It feels responsible. It feels wise. And for generations, we were told that saving money was the golden path to wealth. But if that were true, why are so many people who save diligently still struggling? Why do so many hardworking individuals with years of savings still live paycheck to paycheck, anxious about tomorrow? The truth is simple yet uncomfortable. Saving money alone will never make you rich. In fact, saving, if done without strategy, may quietly be the very thing keeping you poor. When you save, your money rests. It doesn't grow, it doesn't multiply. It doesn't work for you. It merely waits. And while it waits, something else is always at work. Inflation, the invisible tax that eats away at your money's power. Every year, the same dollar buys a little less. The same savings account yields a little less. It's not that saving is wrong. It's that it's incomplete. The world doesn't reward safety. It rewards calculated risk, smart movement, and growth. Think about it. The wealthiest people in history didn't save their way to prosperity. They didn't become successful by hiding money under a mattress or locking it in a low-interest account. They grew their wealth through vision, investment, and understanding that money is not meant to be stored. It's meant to circulate, to flow, to build. Money is like water. Stagnant water rots. Flowing water sustains life. Yet most of us are trained to fear the flow. We are conditioned to hold tightly to every dollar because we grew up hearing our parents say, "Don't waste it, save it." They meant well, but the mindset that builds survival doesn't build abundance. Saving was once a strategy for safety, but in a fast-moving financial world, safety is an illusion. Inflation rises, opportunities pass, and the saver remains in the same spot while the investor builds empires. Why do people cling to saving? Because it feels secure, because it gives the illusion of control, because risk feels terrifying. But the irony is that avoiding risk is the biggest risk of all. When you play small to stay safe, you pay with your future. You trade growth for comfort. And that comfort zone, over time, becomes a trap. Success, whether in business or personal finance, has always belonged to those who understood one principle. Your money should work harder than you do. When you trade your time for money, you're limited. There are only so many hours in a day. But when your money works for you, through investment, ownership, or compounding, the game changes. That's how wealth multiplies. That's how freedom begins. The greatest mistake most people make is confusing saving with progress. Saving is preparation, not execution. It's the act before the act, the seed before the tree. But without planting, nurturing, and letting it grow, a seed will remain a seed. You can save all the seeds you want. You'll never have a forest unless you learn how to plant them wisely. That's where investing comes in. Investing is the art of planting your financial seeds into the right soil, into businesses, property, stocks, or ideas that have the potential to grow. It's not about gambling your future, but understanding your future. Every great investor knows that risk is not the enemy. Ignorance is. Risk, when understood, becomes strategy. When you invest, you shift from being a consumer to being a creator. You stop merely earning money and start making money earn for you. The difference between savers and investors isn't income, it's mindset. A saver looks for security. An investor seeks opportunity. A saver sees money as something to protect. An investor sees money as a tool, a soldier that can go out and bring back more soldiers. Yet, the psychology of saving runs deep. Most people don't save because they want to grow. They save because they're afraid to lose. Fear drives their financial habits. They work hard, earn, then hide their earnings away. They live small to feel safe. But over time, fear becomes a silent thief, stealing not just their financial potential, but their dreams, their curiosity, their courage. If you study the patterns of the wealthy, you'll notice something fascinating. They don't save to save. They save to invest. They keep liquidity only to seize opportunity. Their bank account is not a vault. It's a waiting room. The moment the right opportunity appears, their money moves into assets, businesses, partnerships, or markets. Their money never sleeps because their vision never rests. Now, this doesn't mean recklessness. Smart investing is not about blind leaps. It's about strategy, patience, and perspective. It's understanding that every dollar you own can become a worker, but it needs direction. It needs leadership, your leadership. You are the CEO of your finances, and every dollar is an employee. The question is, are they working for you or are they sitting idle? Let's reflect on this truth. The reason most people never build wealth isn't because they don't earn enough. It's because they don't use what they earn wisely enough. They see money as something to spend or save, not as something to deploy. The middle class saves to survive. The wealthy invest to thrive. There's a moment every person faces when they realize that saving isn't the same as security. You can save your whole life and still feel anxious. You can have a 6-month emergency fund and still fear losing your job. That's because true security doesn't come from the amount of money you have. It comes from your ability to create more when needed. Financial security is not built by saving money, but by building skills, assets, and systems that keep generating income even when you sleep. When you invest, you're not just putting your money at work. You're building your confidence. You're saying, I believe in growth more than I fear loss. That shift in mindset is the foundation of wealth psychology. The moment you stop protecting money and start using it as a creative force, you move from scarcity to abundance. Saving is a defense strategy. Investing is an offense strategy. You need both. But if you only defend, you'll never win the game. The goal is not to die with your savings intact. The goal is to live a life where your money creates impact, freedom, and legacy. Many people ask, but how much should I invest? The real question is, how much of your life are you willing to let remain stagnant? Start small, but start now. Even 10% of your income invested consistently can grow into something powerful over time. The key isn't the amount. It's the discipline and direction. Every empire began with a single decision to start. And what should you invest in? That depends on who you are and what you value. Some find growth in real estate, buying property that appreciates over time. Others in businesses, starting ventures that solve real problems. Others prefer stocks, mutual funds, or index funds. The best investment, however, is always in knowledge. Learn before you leap. Read about finance, study markets, understand human behavior, because markets are just psychology made visible. You'll notice how the world treats risk. The poor fear it. The middle class avoids it. The rich manage it. They study it. They learn how to dance with it rather than hide from it. Risk is a language, and wealth is fluency in that language. You don't eliminate risk. You reduce ignorance. You don't avoid volatility. You learn to navigate it. Think of two people. One starts investing at 25, the other at 35. They both invest the same amount each month, earn the same return. By retirement, the first person has nearly double the wealth of the second. Not because they invested more, but because they invested sooner. That's the power of time, the eighth wonder of the world, as Einstein called compound interest. And yet, we overlook it, because we are busy saving for comfort instead of building for growth. But the people who win financially don't seek comfort first. They seek capacity. They don't ask, how can I stay safe? They ask, how can I grow? That's the difference between a saver and a wealth builder. There's another layer, psychology. Many people struggle not with numbers, but with mindset. They don't believe they deserve wealth. They think money is greedy, or investing is risky, or wealth is for others. These subconscious beliefs shape their reality. If you see money as dangerous, you'll always repel it. If you see it as a tool for freedom, you'll attract and multiply it. Money expands in the hands of those who respect it. It shrinks in the hands of those who fear it. Respect means learning about it, using it with purpose, and understanding that it's energy neutral until you give it direction. The reason the rich get richer isn't luck. It's literacy. They know the game and they play it wisely. The poor, often unknowingly, play defense with no plan for offense. The system rewards movement. The economy grows because money circulates. Every business, every innovation, every job exists because someone took a risk with capital. When you invest, you participate in creation. You become a silent partner in progress. You support growth, and growth returns a favor. There's no one-size-fits-all formula, but there's one universal truth. Doing nothing guarantees nothing. You will never regret learning how to invest, but you may regret never trying. The greatest wealth isn't in money. It's in mindset. The courage to make your money serve your vision, not your fears. Now understand this. Investing is not just about stocks or real estate. It's about where you put your energy. Every hour you spend learning, every relationship you build, every skill you develop, that's an investment. And these are the investments that no market crash can take away. So, before you put your money anywhere, invest in yourself. Learn financial literacy. Understand how money works, how businesses operate, how value is created. Knowledge turns risk into opportunity. When you understand the language of wealth, you stop reacting and start strategizing. You move with confidence, not confusion. And as you grow, you'll notice something profound. Money follows value. The more value you create, the more wealth you attract. Saving doesn't create value. Investing does. When you invest in yourself, your ideas, or others' businesses, you multiply your impact. You don't just make money, you make meaning. Eventually, the game of money becomes less about survival and more about stewardship. The goal isn't to hoard, but to build. Not to keep, but to create. You'll start to see that real wealth is not about numbers in an account, but about options, freedom, and time. It's about waking up and knowing your life is your own, not dictated by a paycheck or a boss. But that freedom requires courage. Courage to move beyond comfort. Courage to think long-term. Courage to believe that you can be the architect of your financial destiny. Saving alone won't get you there. It's a starting line, not a finish line. The finish line belongs to those who dare to grow. So ask yourself, are you holding your money, or is your money holding you back? Are you saving for safety or investing for freedom? Because the path you choose today decides the life you live tomorrow. The rich don't work for money. Money works for them. They understood that every coin can become a seed, and that a seed, when planted wisely, can grow into a tree that feeds generations. That's not greed, that's wisdom. That's vision. If you're listening to this right now, maybe you've been saving for years, afraid to invest. Maybe you've been waiting for someday, but someday is a myth. The best time to start was yesterday. The second best time is now. Take one step. Learn about one new investment option. Start with 1% of your income. Read one book on finance. Watch one tutorial on compounding. Don't let inaction be your greatest expense. Because in the end, wealth is not built by those who save perfectly, but by those who act courageously. You don't have to be rich to invest. You become rich by investing. You don't have to have it all figured out. You just have to start, because starting small with the right mindset is more powerful than waiting big with the wrong one. Remember this: the poor work for money. The middle class saves money. The wealthy make money work for them. So, if you want freedom, real, lasting freedom, stop letting fear dictate your financial choices. Start letting vision lead them. The bank protects your money, but your courage multiplies it. There's a hidden story behind every financial decision you make. It begins long before you ever earned your first paycheck. It begins in your childhood. The moments you watch your parents argue about bills. The times you heard someone say, "Money doesn't grow on trees," or "We can't afford that." Those words planted seeds. They grew into beliefs. And those beliefs became the invisible walls shaping your financial destiny. Most people never realize how deeply their psychology controls their wealth. They think success is about numbers, about strategy, about who knows the right stock or owns the right business. But wealth has always been an emotional game long before it becomes a financial one. Every choice to save, to spend, to invest, to hesitate comes from emotion, fear, security, pride, hope, guilt. You might not see it, but your financial life is simply a mirror reflecting what you believe you deserve. And for many people, that belief is painfully small. You see, the greatest obstacle to wealth isn't the lack of money. It's the fear of losing it. It's the voice that whispers, "What if you fail?" The same voice that convinces you to play it safe, to save a little, to wait until the right time. But that voice, if you obey it long enough, builds a cage around your potential. Fear has a way of disguising itself as wisdom. It tells you, "Be careful." It calls itself prudence or responsibility. But more often than not, it's just fear wearing a mask. And while you play safe, the world keeps moving. The brave keep building and opportunities keep passing. The truth is, every wealthy person you admire once stood where you are, uncertain, afraid, unsure if they were making the right decision. The difference is, they didn't wait for the fear to disappear. They learned to move with it. Because courage is not the absence of fear, it's action in spite of it. We are all taught to fear losing money, but almost no one teaches us to fear wasting time. You can always make more money, but you can never get back lost years. The person who risks a dollar to grow will always be wealthier than the one who protects it until it loses its value. Fear of loss is natural. It's human. It's biological. But wealth begins when you realize that loss is not death. It's data. Every failure, every mistake, every loss teaches you something about markets, about people, about yourself. The poor see loss as an end. The wealthy see it as a lesson. That's the difference between a fixed mindset and a growth mindset. Fear narrows your vision. It makes you look at life through a keyhole. You stop seeing possibilities and only see problems. You stop thinking, what if it works? And start thinking, what if it doesn't? But every success story you've ever heard was born from someone who asked the first question, not the second. The psychology of wealth begins with one truth. Your external world will always reflect your internal one. If you believe money is scarce, you will live in scarcity. If you believe money is abundant, you will start to see opportunities everywhere because your brain filters reality based on what it expects. That's why two people can look at the same situation. One sees a dead end. The other sees an opening. The difference isn't luck. It's perspective. Your mind is your first investment. Before you ever buy a stock, start a business, or build an asset, you must first reprogram the beliefs that shape how you think about money. Because until you do, no strategy will work for long. You'll always self-sabotage, limit yourself, or retreat at the first sign of risk. Think of money as energy, neutral, powerful, and reactive. It amplifies whatever you are. If you're fearful, it makes you more fearful. If you're confident, it gives you more confidence. If you see money as something dirty or dangerous, it will always avoid you. But if you see it as a tool for creation and impact, it will flow to you naturally because you align your actions with value creation. So many people talk about investing, but few talk about investor psychology. The investor's true enemy isn't the market. It's emotion, greed, and fear. These two forces have destroyed more wealth than any economic crash. Greed makes you chase what you don't understand. Fear makes you abandon what could change your life. Master these two emotions and you master money. There's a strange paradox in the human mind. We fear failure more than mediocrity. We fear losing money more than losing years of our life stuck in jobs we hate. We fear short-term discomfort more than long-term regret. And so we stay small. We save a little. We dream quietly. We convince ourselves that safety equals happiness. But deep down, we know it doesn't. True success requires risk, but not blind risk. Intelligent, educated, calculated risk. It requires you to trust yourself, to learn, to build awareness, to start small and grow gradually. You don't have to jump off a cliff. You just have to take the first step forward. The reason most people never start investing isn't because they lack money. It's because they lack clarity. They don't know where to begin, and instead of learning, they freeze. But clarity only comes from motion. You can't think your way to confidence. You must act your way into it. That's the beauty of financial growth. You don't need to be perfect to begin. You just need to be consistent, because the process itself teaches you. The more you invest, the more you learn how money behaves, how markets move, how people react. And one day, what once terrified you becomes familiar. What once looked impossible becomes normal. Let's talk about the psychology of the wealthy. What makes them different? It's not luck or background, it's perspective. The wealthy see themselves as creators, not victims. They believe that if the economy shifts, they can adapt. If the market crashes, they can recover. If they lose everything, they can rebuild. That unshakable belief in their ability to create again, that's real wealth. Money without confidence is fragile. Confidence without money is potential. But when you have both, you become unstoppable. That's why the richest people are often the calmest, because they understand that wealth isn't in the bank. It's in their mind. If you take away everything from a true entrepreneur, they'll rebuild it in a few years. Take away everything from a saver, and they'll struggle to start again. Why? Because one depends on circumstance. The other depends on skill. That's why your mindset is your greatest investment. Every dollar you spend on learning, reading, mentoring, or understanding finance multiplies your ability to create wealth. The return on knowledge always outpaces the return on money. Now think of fear again. What exactly are you afraid of? Losing money? Being wrong? Failing publicly? These fears are all connected to ego, the part of you that wants to look right, to stay safe, to be accepted. But wealth requires humility, the ability to learn, to make mistakes, to grow. You will lose sometimes. You will choose the wrong stock, the wrong business, the wrong idea. But each mistake makes you wiser, and wisdom compounds faster than any investment ever could. There's something powerful about learning to fail gracefully. It gives you freedom. Once you stop fearing loss, you become dangerous, not reckless, but liberated. You stop hesitating and start executing. You stop hoarding and start building. You stop surviving and start thriving. Wealthy people fail often, but they fail forward. They don't dwell, they adjust. That's what separates experience from fear. Experience says, that didn't work, let's refine. Fear says, that didn't work, I'll never try again. The first leads to progress. The second leads to paralysis. So, how do you reprogram your wealth mindset? You start by rewriting the stories you tell yourself. If you grew up believing that money is the root of evil, replace that with, money is a tool for good in the right hands. If you believe investing is too risky, replace it with, not investing is the biggest risk. If you believe you're not smart enough to understand money, replace it with, I'm capable of learning anything I commit to. Your language shapes your psychology, and your psychology shapes your actions. The words you speak about money either attract it or repel it. The moment you start speaking as an investor, thinking as a creator, and acting as a builder, your entire reality begins to shift. Every successful investor has stories of failure, loss, and risk. But what made them extraordinary is that they stayed in the game. They understood that consistency beats perfection. They saw every dip in the market as a lesson, every wrong move as part of the process. The poor fear risk because they focus on losing money. The wealthy embrace risk because they focus on gaining mastery. That's why even if both lose the same amount, one feels defeated while the other feels empowered. The difference isn't outcome, it's outlook. When you begin investing, you'll notice your fears magnify. Every fluctuation will feel personal. But as you grow, you'll realize that wealth is not built on emotion, but on principles. Principles like patience, diversification, value creation, and long-term vision. The real skill isn't predicting the market. It's managing yourself. Because your emotions are the true market you must master. When everyone else panics, can you stay calm? When everyone else rushes in greed, can you wait? When everyone else quits, can you continue? That's what separates investors from spectators. Fear will always whisper reasons to stop. But if you listen to fear, you'll end up with a life that feels safe, yet unfulfilled. The irony is, the most dangerous thing you can do is to live too safely. Because when you avoid risk, you risk missing out on the life you were meant to live. You'll never feel fully ready. That's the secret no one tells you. The leap always feels too far. The investment always feels uncertain. The timing always feels wrong. But once you move, once you take the step, the path begins to unfold. There's something deeply human about growth. It always demands courage. Whether it's in business, relationships, or wealth, expansion always comes after discomfort. That discomfort is proof that you're evolving. The wealthy are not fearless. They've just trained their minds to interpret fear differently. They see it as a signal, not a stop sign. When fear shows up, they don't freeze, they investigate. What's the real risk here? What am I missing? What can I learn? They turn fear into fuel. Every person alive has two choices, to build from fear or to build from faith. Fear builds walls. Faith builds bridges. Fear saves. Faith invests. Fear says, what if I lose? Faith says, what if I grow? Money amplifies whichever voice you choose to listen to. If you let fear guide your finances, you'll always live small. If you let faith and strategy guide you, your potential becomes limitless. The most beautiful part of wealth creation is not the money itself. It's who you become through the process. You become disciplined, patient, strategic, emotionally intelligent. You learn to think long-term, to delay gratification, to see patterns others miss. You grow not just in wealth, but in wisdom. At some point, you realize that wealth is not about numbers. It's about capacity. The capacity to take risk, to handle loss, to lead others, to make decisions under pressure. That's why building wealth takes time, not because of the math, but because of the maturity. Fear wants instant comfort. Growth requires delayed gratification. Every time you choose growth over comfort, you evolve into a stronger version of yourself. And one day, you'll look back and realize the thing you feared the most wasn't losing money. It was losing the illusion of control. Once you let that go, you'll be free. Free to learn, free to grow, free to win. Because real freedom is not the absence of fear, it's mastery over it. And that mastery, when applied to your finances, creates unstoppable momentum. So if you feel fear right now, good. It means you're on the edge of transformation. It means you care. It means you're awake. Don't run from it. Learn from it. Channel it. Turn it into fuel. Because behind every fear lies the next version of you. Wiser, braver, wealthier. The world doesn't need more savers. It needs more thinkers, more creators, more people who believe in their vision enough to take the leap. Your fear is not your enemy. Your hesitation is. Fear will always visit. Let it sit, let it speak, but don't let it decide. You don't overcome fear by waiting until it's gone. You overcome it by moving anyway. Because wealth doesn't come to those who wait. It comes to those who act with wisdom, persistence, and courage. And that courage, once ignited, will make you unstoppable. You've been told all your life that saving is the key to wealth. From childhood, the advice echoes like an old family rule. Save your allowance. Save your salary. Save for a rainy day. It sounds safe. It sounds responsible. It feels like the right thing to do. But what if that very mindset is the reason you're still stuck? What if saving alone, without learning how to make money grow, is quietly keeping you poor? Most people never question the system they were trained to follow. They think discipline equals success. They imagine that cutting coffee or skipping luxuries will somehow open the doors to freedom. But behind that illusion lies a hard truth. Saving is defensive, not creative. It protects what you already have, but never multiplies it. And when life inevitably throws you a storm, inflation, emergencies, lost jobs, your savings bleed faster than you can refill them. Think about it. The price of everything rises each year, but your saved money doesn't grow at the same rate. Inflation eats your efforts silently, like a slow leak in a tire. You think you're staying safe, but you're actually losing ground. The problem isn't that saving is bad. It's that saving without strategy is like standing still while the world keeps moving. It's a false sense of control. The middle class, the largest group in society, is built on this illusion. They're told to go to school, get good grades, find a stable job, and save whatever is left. They're not taught how money works, only how to obey it. They fear risk, so they avoid opportunity. They confuse comfort with security. They say because it feels safe, but safety has a cost. Stagnation. You've probably seen this pattern around you. People who've worked for 20, 30 years, always saving, always careful, yet never free. They can't retire without worry. They can't travel without guilt. They can't spend without anxiety. Their savings became their cage. And when they finally need that money, for health, for emergencies, for family, it disappears faster than it was earned, because money that sits still dies quietly. The truth is, wealth isn't built by preservation. It's built by creation. You don't get rich by storing. You get rich by flowing. Money behaves like water. Stagnant pools breed decay, while flowing rivers sustain life. The poor save, the rich circulate. The poor hold tight, the rich allocate. That's the real difference, not education, not luck, but understanding the movement of value. Saving has its place. It teaches discipline. It's a first step toward financial awareness. But it was never meant to be the last step. It's like learning to crawl and mistaking it for walking. The tragedy is, most people stop there. They think saving is the goal, not the foundation. And the result? They end up protecting their limitations instead of expanding their potential. If you look closely at the world's wealthiest people, entrepreneurs, investors, innovators, they don't worship saving. They respect it, but they use it as a tool. They see money as energy, something that must circulate to create more energy. They invest it into ideas, assets, people, and systems that work even while they sleep. That's how they escape the cycle. Their money works harder than they do, but the average person saves because of fear. They fear losing what little they have. They fear the unknown. They fear failure. That fear, disguised as caution, becomes a lifelong barrier. The poor and middle class play not to lose. The rich play to win. The mindset is everything. Here's the paradox. The more you cling to your money, the faster it slips away. The more you trust its flow, the more it returns. That's not mysticism. It's basic economics. When you invest in a skill, a business, an asset, you take part in growth. You allow your money to compound. You trade short-term comfort for long-term freedom. But when you only save, you reject growth. You hide your potential in a vault of fear. Maybe you felt this tension. You want to invest, but you hesitate. You wait for the right time. You tell yourself you will start when you have more. But the truth is, the right time never comes. The habit of waiting becomes the habit of missing. And every day your fear makes decisions for you. Opportunity quietly walks past. Let's be honest, saving feels good. It gives a sense of control in a chaotic world. Watching the balance grow makes you feel secure. But that feeling is deceptive. It tricks your brain into believing you're progressing, when in reality you're just delaying. Saving without purpose is like driving with the parking brake on. Lots of effort, no movement. To build wealth, you need to understand money as a living system. Money grows when it's attached to value. Value grows when it solves problems. And problems exist everywhere. The rich look for opportunities hidden in those problems. The poor see problems and retreat. The difference isn't intelligence, it's perspective. One sees risk, the other sees leverage. You don't need millions to start thinking like the wealthy. You just need to change your relationship with money. Stop asking, how can I save more? And start asking, how can I make my money earn for me? Because money without motion decays, and motion without direction destroys. The key is balance, learning when to protect, when to grow, and when to release. Many people misunderstand the purpose of savings. Savings are not a fortress. They're a bridge. They help you cross from survival to opportunity. Once you built that bridge, you're meant to walk across it, to use your resources to build systems that multiply themselves. That's the turning point between the poor and the wealthy. The poor cling to the bridge. The wealthy cross it. Think of your savings as soldiers. If they stay in the barracks, they're safe but useless. If you send them into the right battle, the right investments, the right education, the right ventures, they bring back more. The goal isn't to keep your soldiers safe. It's to win the war of freedom. But this isn't just about money. It's about mindset. Because the same fear that stops you from investing also stops you from evolving. You play small in life because you fear loss. Yet every success story in history began with a risk. Someone willing to lose in order to learn, to fail in order to grow. Saving becomes a metaphor for comfort, and comfort becomes a silent killer of ambition. The irony is, saving used to make sense. Decades ago, when interest rates were high and inflation was low. But the world has changed. Technology, automation, and digital economies have rewritten the rules. The banks no longer reward savers. They reward movers. The money you save today is used by others. The banks invest it, multiply it, and pay you crumbs in return. You think you're being smart, but you're funding someone else's vision. That's why you must evolve. The old advice of work hard and save doesn't fit the modern economy. The new rule is work smart and grow. Because money no longer rewards labor, it rewards leverage. It rewards those who know how to use systems, data, creativity, and networks to multiply results. You can't save your way to freedom in a world where everything compounds, technology, ideas, and inflation alike. Look around you. The people who move fast, who adapt, who learn, they're winning. Not because they save more, but because they reinvest more. They use time as capital. They treat every mistake as tuition. They understand that failure is feedback, not finality. And they never let fear freeze them into inaction. If you want to escape the trap, start small, but start now. Save with intention, not attachment. Use savings as fuel, not as a finish line. Create a plan that moves your money, even if it's slow at first. Learn how compounding works, not just in finance, but in mindset. The small investments you make in yourself, your knowledge, your creativity, they all multiply. Because in truth, the greatest asset isn't your savings account. It's your ability to create value. When you develop that, money becomes a byproduct, not a pursuit. The world doesn't pay you for how much you save. It pays you for how much you contribute. And contribution always starts with courage. The courage to step beyond fear. Imagine your future self looking back. Years from now, realizing that the turning point wasn't when you earned more, but when you understood more. When you stopped hoarding and started creating. When you stopped playing defense and began playing offense. That's the shift that transforms lives. So ask yourself, are you protecting your limitations, or are you expanding your possibilities? Are you saving to survive, or are you investing to evolve? Because one leads to slow decay and the other to exponential growth. You were never meant to live in survival mode. You were meant to grow, to build, to circulate value. Saving might give you peace today, but growth will give you freedom tomorrow. Don't settle for safety when you were designed for expansion. Remember, money is not the goal, freedom is. And freedom comes not from what you keep, but from what you create. Saving is step one, but creation is the journey. You've probably noticed something strange about money. Two people can earn the same amount. One becomes free, the other stays trapped. The difference isn't the amount, it's the mind handling it. Money, after all, is psychological before it's practical. It doesn't just move through your hands. It moves through your beliefs. And that's where the real game is played, not in numbers, but in narratives. The psychology of saving is deeply emotional. People don't save only because they're responsible. They save because they're afraid. Afraid of the unknown. Afraid of scarcity. Afraid of being helpless again. Somewhere in childhood, most of us learned that money equals safety. That it's something to cling to, not to command. So we grow up protecting it like a secret, never realizing we become slaves to the very thing we fear losing. Fear disguises itself as wisdom. It whispers, be careful, don't risk it. You can't afford to fail. And so you play small, calling it stability. But in reality, you're protecting insecurity, not security. You mistaken anxiety for discipline. The truth is, real stability doesn't come from saving. It comes from understanding. Because when you truly understand how money works, you don't fear losing it. You know how to rebuild it. This is why most people stay poor. They're emotionally attached to money, not strategically aligned with it. They treat it like a scarce resource instead of a renewable one. They see it as something to preserve, not to multiply. And when you live from that mindset, every financial decision is made from fear, not growth. You hold back. You hesitate. You wait for permission from a world that doesn't owe you any. Saving feels safe because it gives an illusion of control. You can count it, see it, measure it. It's tangible. Investing, on the other hand, feels like letting go, trusting something uncertain. But all creation begins with letting go. You can't plant a seed without losing it to the soil. You can't grow a tree if you're afraid to bury the seed. That's the same with money. It only multiplies when you release it into movement, but fear makes you freeze. It convinces you that the unknown is dangerous. That change equals loss. So you cling to the known, even when it keeps you stuck. This is why financial stagnation feels like emotional safety, because the brain prefers familiar pain over unfamiliar potential. You would rather stay in a known struggle than step into an unknown possibility. Let's break it down deeper. The poor mindset is built around avoidance. Avoid pain, avoid risk, avoid failure. It's defensive. It's focused on survival. But the wealthy mindset is built around engagement. Engage the challenge. Learn the rules, master the game. It's proactive. It's focused on creation. The poor mindset asks, what if I lose? The wealthy mindset asks, what can I learn? One plays not to lose. The other plays to win. The emotional root of this difference lies in self-worth. People who believe they can create value don't fear losing money. They know they can generate more. Every human being faces the same challenge when it comes to wealth. Fear. It's quiet at first, almost imperceptible. A whisper in your mind that says, be careful, don't risk too much. You might lose it all. That whisper becomes louder over time, and for many people, it becomes a dominant voice. It shapes decisions, limits ambition, and keeps potential trapped. But the truth is simple. Fear is not the enemy. Indecision, inaction, and avoidance are the real dangers. Most people think they are rational about money, but rationality is a lie when emotion runs the show. Decisions are rarely based on spreadsheets or logic. They are based on childhood beliefs, societal conditioning, and the invisible stories we tell ourselves about money. The first step toward wealth is awareness. Awareness that every choice you make is colored by psychology, and that those choices define your life more than your income. Fear is biological. It's survival instinct. Our ancestors depended on it to escape predators, find shelter, and survive harsh conditions. But today, the predators are different. They are opportunity, innovation, risk, and change. And fear misfires. It convinces you to stay safe when safety is stagnation. It tells you that you are protected in comfort. But in truth, comfort is a cage. Wealth begins when you recognize that fear is a guide, not a dictator. Fear tells you where the challenge lies, but it should never tell you whether to move. The people who build lasting wealth do not eliminate fear. They channel it. They act through fear. They do not wait for courage to appear. They summon it while trembling. That is the discipline that transforms savers into creators. Most people never reach this point because of the stories they inherited. Money is the root of evil, they hear. Rich people are greedy. Investing is too risky. Every one of these statements, internalized, becomes a self-fulfilling prophecy. You believe the world is against you, and so it is. Your mindset becomes a lens through which reality appears, and reality always aligns with your beliefs. To break free, you must confront your internal narratives. Ask yourself, what am I afraid of? Losing money? Looking foolish? Making the wrong choice? And then reframe it. Losing money is not failure. It's tuition. Looking foolish is not shame. It's visibility. Making the wrong choice is not the end. It's data. The moment you start seeing loss as feedback rather than defeat, your mind begins to expand. Investing is terrifying precisely because it challenges your ego. The ego wants certainty, validation, and control. The market offers none. It is volatile, unpredictable, and often unforgiving. But wealth rewards those who can master their ego, who can step into discomfort without letting it dictate action. Confidence, not arrogance, is the currency of high-stakes financial thinking. Here is a paradox. The more you fear, the less you grow. And yet, the path to wealth is always lined with risk. Every business, every stock, every property, every breakthrough begins with stepping into uncertainty. The difference between a savior and an investor is the willingness to embrace risk, not recklessly, but intelligently, with knowledge and preparation. Knowledge is the antidote to fear. When you understand the mechanics of a business, the history of a market, the patterns of human behavior, fear loses its power. It doesn't disappear. It simply becomes a signal, a guidepost pointing at areas where you need to focus, learn, and strategize. The wealthy read this signal differently. They see opportunity. The fearful see threat. The psychology of risk is misunderstood. Most people assume risk is something external, a stock dropping, a deal falling through, a market collapsing. In reality, risk is internal. It lives in hesitation, procrastination, and indecision. The most dangerous risk is not losing money. It is losing years of your life to inaction. Every day you postpone investment, every day you delay learning, compounds into lost opportunity. Time, more than money, is the ultimate metric. Money can be regained. Time cannot. That is why the first investment should always be in your mindset. Train it, educate it, strengthen it. Read about finance, study markets, explore psychology, and learn from mentors. Knowledge compounds. Confidence compounds. Skill compounds. And when applied, these compounds translate directly into wealth. Consider this. Two people have the same income, the same expenses, and the same savings. One invests 5% of their income consistently, educates themselves, and cultivates an abundance mindset. The other saves obsessively, avoids risk, and fears the unknown. 30 years later, the difference is astronomical. Not because the first person was smarter or luckier, but because their psychology enabled action and action enabled growth. The fear of investing is rarely about money. It is about identity. People fear stepping into a role they haven't yet embodied. They fear being someone who takes risks, someone who thinks like an owner, someone who controls their financial future. The shift is always internal first. Before you ever buy a stock, start a business, or acquire property, you must become the person capable of doing so. The mindset precedes the outcome. This is why mentors, books, and experiences are invaluable. They allow you to see models of behavior, patterns of thought, and decision-making processes that you cannot invent alone. Every wealthy person you admire has absorbed this type of knowledge, consciously or unconsciously. They invest in themselves long before they invest in anything else. Action through fear is a muscle. You have to build it gradually. Begin with small investments. Learn by doing. Allow yourself to fail safely. Each mistake teaches you not only about money, but about yourself, your patience, your resilience, your judgment. Fear will always be present, but it will shrink in proportion to your competence. Confidence grows with repetition, just as wealth grows with compounding. Emotions are the hidden tax on wealth. Greed tempts you to chase every opportunity blindly. Fear tempts you to retreat prematurely. The average investor loses more to psychology than to markets. Mastering your emotions is not optional. It is mandatory. The people who thrive financially are not immune to fear or desire. They are disciplined in how they respond. They pause. They analyze. They act strategically. There's another layer, the psychology of money itself. Money is not merely currency. It is energy. It amplifies whatever you are. If you are fearful, money contracts. If you are confident, money expands. If you are generous, money circulates. If you are greedy, money stagnates. That is why financial literacy alone is insufficient. Emotional literacy is equally critical. Your emotional state governs how effectively you create, allocate, and grow wealth. The wealthy understand this intuitively. They see every dollar as a worker, not a trophy. Each dollar is given a role to invest, to grow, to create more value. They do not hoard money out of fear. They deploy it with intention. The poor, conversely, see money as security, a static goal. That mindset makes every fluctuation a threat and every opportunity an anxiety. Now, think about time again. The longer you wait to act, the more fear solidifies. Procrastination hardens into habit. Opportunity becomes intangible, while the illusion of safety grows heavier. Every day you hesitate, the gap between you and financial freedom widens. Action compounds like interest. Hesitation compounds like decay. The longer you delay, the more years of opportunity vanish. Every small investment in yourself, every calculated financial step, every lesson learned is a deposit into the bank of future freedom. Fear cannot prevent this, only delay it. So you begin small. A book on investing, a podcast on psychology, a conversation with a mentor, a modest stake in a business or fund. Each small act builds confidence and reduces fear. Each step changes your identity incrementally, from saver to investor, from follower to creator, from spectator to participant. The greatest risk is not losing money. The greatest risk is never stepping into the arena. The greatest risk is letting fear dictate a life of quiet stagnation, of untapped potential, of dreams deferred. You may feel unprepared. You may feel inexperienced. That is a natural signal that you are on the threshold. Fear is not the barrier. It is the indicator. It marks where growth is required. Move into that space deliberately, and your perspective begins to shift. The wealthy embrace risk not blindly, but strategically. They study markets, analyze trends, diversify portfolios, and understand human behavior. They allocate resources where return exceeds risk, and they continuously educate themselves to reduce uncertainty. Every decision is guided by principle, not panic. Meanwhile, the average person obsesses over protection. They seek guaranteed returns, even when guarantees are illusions. They believe in comfort over capacity. They save endlessly, hoping safety equates to progress. It does not. Safety without growth is stagnation disguised as prudence. Financial mastery begins with emotional mastery. You must learn to pause, to analyze, to question instinct, to recognize when fear is a false signal and when it is an actual warning. You must cultivate patience and long-term vision. You must align your behavior with the future self you desire, not the present self you fear. And here's the key. Wealth is psychological first. Knowledge, courage, emotional intelligence, and vision compound over time. When combined with capital, these forces produce exponential growth. The investor who masters their mind will inevitably grow their money. The saver who never does will see diminishing returns on both. Think about legacy. What do you want to leave behind? Not merely dollars, but freedom, capacity, and the ability to act decisively. Every decision you make today echoes into the life you lead tomorrow. Fear shortens the echo. Courage lengthens it. And the choice is always yours. Start now. Small steps, deliberate actions, and consistent learning. Build emotional resilience. Invest in understanding. Embrace failure. Transform fear into fuel. The psychology of wealth is not about avoiding mistakes. It is about creating patterns of deliberate, informed action that ensure mistakes do not define you. Money is neutral. Fear is natural. Growth is intentional. The moment you understand this, you unlock a powerful truth. Wealth is not earned solely in accounts or assets. It is cultivated in the mind, strengthened by courage, and executed through disciplined action. And so, as you navigate your financial journey, remember, fear will always be present. Doubt will always whisper. The market will always fluctuate. But your ability to act deliberately, consistently, and intelligently is your greatest asset. Invest in that, and the rest, money, freedom, opportunity, will inevitably follow. As we reach the end of this journey, take a moment to breathe and reflect. Everything you've learned today isn't just about money. It's about life. It's about understanding that wealth begins in the mind, grows through courage, and multiplies through disciplined action. Saving gives you safety. Investing gives you freedom. And your mindset determines how far that freedom can take you. Fear will always be present. It's part of being human. But fear is not the enemy. Hesitation is. The moment you move despite fear, the moment you choose growth over comfort, you step into a life few ever dare to imagine. Remember that wealth is not measured in numbers alone. It is measured in the courage to act, the wisdom to learn, and the resilience to continue when everything seems uncertain. It is measured in the ability to see opportunity where others see obstacles, to turn loss into knowledge, and to transform challenges into stepping stones. Your journey doesn't end here. It begins anew with every decision, every step, and every risk taken wisely. Start small, but start now. Build knowledge, cultivate confidence, and invest in yourself first. The world responds to those who act, not to those who wait. And one day, when you look back, you will see that the real transformation was never in the money you earned. It was in the person you became. Courageous, strategic, unstoppable, ready to create not just wealth, but a life of freedom, purpose, and possibility. The choice is yours. Step forward, take the leap, and let your future self thank you for the actions you take today.